Welcome back to the channel, everybody. So we have some XRP news today, some Bitcoin news today. You see what's going on? I told you, get those corrections and pullbacks. Whenever you have those ETFs come out, it was no different than when the ETFs dropped in the US. You had disappointing price action. People were all upset. Oh, isn't it supposed to explode immediately? No. And then because of that disappointment and other factors as well, we're going to get into a little bit of that. You had a pullback, correction, dips and such. No different here. You had the Hong Kong ETFs pop off, and you're going to have these corrections. You're going to have these dips and such. It takes a little bit of time for those ETFs to kick in. There's going to be a lot, there has been a lot of selling that's going to happen as well. This is nothing. In my humble opinion, I mean, I can't tell you how to feel. This is nothing at all, just typical behaviors. And then, of course, you're going to have a lot of media players, really ramping things up as far as FUD, gets a lot of clicks and such. And I'm sure there's a lot of market manipulation as well. It just is what it is. Just part of the game, folks, part of the game. But anyway, we have some big XRP news. We have some Bitcoin news. We have some banking news again. Can't make this up. And guess what, folks? I'm gonna tell you this. You can't make these titles up. There's another warning. I hate to laugh, but it's funny. They're all using the same verbiage. What's going on? I'm gonna use that title as well. It's eye catching, and it just blows the mind that they're really using this verbiage. There's another warning from an expert. Can you believe it? Man, these are crazy times we live in. So we have a lot of news to get through. Let's begin. All right. So now this article is titled Ripple Expands Its Presence in Japan with Latest Partnership. And what's crazy, we were just talking about this. I was saying how bullish Japan is on XRP. It's not just because of Ripple's presence, but remember, SBI has a huge foothold in Japan, and they were the ones that came out. SBI, give them credit. They laid a lot of the foundation. They are the ones that came out and said, hey, listen, we believe that Japan will run on XRP. That was SBI, not Ripple. So you have two major companies, wiggling their way through Japan. And listen, Japan, all of these major countries can use help, all of them. But Japan in particular has been having a hard time with their financial system, right? They need a few upgrades and a lot of the things that the XRPL and XRP and Ripple and SBI can offer. But let's read this little tidbit here. All right. So now it begins here. It says San Francisco based company Ripple has announced a tie-up with HashKey DX, a Tokyo based specialized consulting company in blockchain technology. HashKey DX, which is part of HashKey Group, provides support for foreign companies that aim to speed up their growth in Japanese markets. The main purpose of the partnership is to roll out enterprise solutions for Japanese customers with the help of the XRP ledger. They will be launched in collaboration with SBI Ripple Asia. I knew it. I told you, SBI, they've been one of the loyalist companies to XRP. I felt like they may have had a hand in it, and there you go, confirmation. They will be launched in collaboration with SBI Ripple Asia, a joint venture between Japanese financial giant SBI and Ripple that went live back in 2018. Notably, SBI Group is going to pioneer this particular supply chain solution among Japanese-based corporations. Now, if we could get our hands on which corporations those are, then we can also possibly, if they provide the information, we can also possibly get our hands on how much money value is flowing through them. Because remember, what did all the experts say? Everything will be tokenized. So that's of value if we can get our hands on that information, that is. I know some of you out there are great researchers. You'll probably get it before I could. It says Ripple CEO Brad Garlinghouse commented on his company's most recent partnership in a post on the X social media network. And this is what he said. Well, okay, he really didn't say anything. He put Japan and the shaking hands emoji in the XRPL. Of course, Brad Garlinghouse super bullish on XRP as well. That man has a XRP tattoo. Yeah. That's how serious he is about XRP. Hong Kong headquartered HashKey was established back in 2018, becoming the leading end-to-end cryptocurrency services group in Asia. The group offers its services to retail customers as well as institutional investors. That's important. It has surpassed $7 billion in total trade, with the number of registered companies surpassing 4,000. All right, let's move on to another article here. We have a lot of news to get through today. Every day, there's some days I actually wish that there was just a little bit of news, but right now things are just happening. Boom, 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 boom. The markets are hot. Activities are rising. So there's a lot of hot news every single day now. And I'm not complaining about it at all. It makes for easier time as a researcher. I don't have to do so much digging. You don't have to have so much of a headache. What's the most frustrating thing? Let's say you want to start a YouTube channel. You're a researcher, right? The most frustrating thing, and I've been through this time and time again, so prepare yourself just in case, is when you're researching and you don't find anything powerful or potent. And it's the end of the day. It's the end of the day and you're just like, man, and you're chasing this, like, you're chasing the lead. You're chasing something. It's there, but you just don't find anything because it may be buried. That's the most frustrating thing ever. And you just got to wake up the next day and hit it hard again. That's when you're a detective, that's what you got to do. Hit it hard again. You're going to find something sooner or later. If you know it's there, you'll find it, right? It takes a lot of reading. Anyway, you don't want to know about that. Let's get to the next article here. This article is titled, it's an SEC update. In the latest Ripple versus SEC update, SEC wants court to deny Ripple's motion to strike, of course. This is typical of the SEC. According to an update shared by seasoned defense lawyer James K. Fallon, the Securities and Exchange Commission has filed its opposition to Ripple's motion to strike. The SEC submitted the motion yesterday in accordance with the court's recent scheduling order. It says last week, Ripple filed a motion asking the court to disregard the testimony and supporting evidence submitted by the SEC in support of its opening remedies brief. The testimony was issued by top SEC accountant Andrea Fox, who provided an arithmetic report on Ripple's financial records that we know about. We heard about that. It says, at the time, Ripple characterized Fox as an expert witness and not as a summary witness, as claimed by the SEC. As a result, the crypto payments company contended that the SEC should have tendered her declaration during the discovery phase of the remedies litigation. While the SEC claimed that Fox is a summary witness, Ripple argued that summary witnesses are not allowed to offer new information after the close of discovery. Hence, Ripple asked Magistrate Sarah Netburn to strike Andrea Fox's expert materials. All right. SEC counters Ripple in its latest filing. The SEC asked the court to deny Ripple's request, emphasizing that the company mischaracterized Fox as an expert witness instead of a summary witness. They mischaracterized. You sure about that? All right. Anyway, we'll see what happens. All right. So now let's move on here. And here we get our warning of the day. They keep on issuing warnings. It's getting interesting. So now they're just coming out and they're telling the people what's about to happen. We've been telling people for a long time, for every cause, there is an effect. For every effect, there is a cause. For every cause, there is a B cause. The domino gets tipped and it hits another one, and that one hits another one. It's the domino effect, and that's what we're about to see. It's what I was talking about the other day. But let's hear it from a so-called expert, all right? So this article is titled, wait, let me scroll up. Return of the Banking Crisis. Expert warns Republic First seizure is a canary in the coal mine. Wait a minute. Elaborate a little bit, sir. It says during the spring of 2023, a sequence of failures put stock and cryptocurrency investors on edge as 4 banks on edge. Oh, I was very happy. The gold and silver went insane. That's number one. Number two, the more that they show their weakness, the more that they have to congeal with the new financial system. So you got to specify which type of crypto people you're talking about. Because I think a lot, not all of, but a lot of Bitcoin holders were like, yes, because they're going to need us in a lot of different ways, for security, for interoperability, to save some money, to make more money, for lending, for staking, all types of things we bring to the table. They'll be siloed. We have continued global reach because we haven't been used as a weapon like Swift or the other banks or so listen, we have so many advantages. So I don't know about others, but I felt pretty good during that time. But let's keep going. It says some of them crucial for the crypto market ecosystem failed in relatively rapid succession. Yeah, but it was good to get that on out the way. It says the situation was made scarier by substantial confusion driven in part by the fact that it was also alleged that one of the banks, Silicon Valley Bank, collapsed largely due to ringing the Fed several times too late to receive a critical lifeline. Yeah, they should have done better business. They wouldn't have had to do that. But loose monetary policy and the cowboy antics of a lot of the policymakers within the banking industry, this is what happens. Additionally, the sequence of events shook public confidence in U.S. regional banks since the fact that SVB didn't have a permanent chief risk officer. Let's skip that part. Let's get down here. I want to get to this warning. Tell me now what this individual is saying about now. All right, here we go. Finally, regional banks in danger as unrealized losses mount and depositors fear contagion. Wait a minute. Let's not play this game. It's not just unrealized losses. They have unrealized losses, commercial real estate problems, right? Which I have an article here about office defaults coming up a little bit later. You have unrealized losses. You have commercial real estate problems. You also have a lot of data breaches. They don't even talk about the data breaches, right? You have a lot of executives getting in trouble, right? Okay. And a lot of we're getting exposed. This is what the articles say, from stealing money from clients. That's number 4. You have client faith in the banking system at an all-time low. That's according to the experts. Look it up for yourself, but I showed the articles. Then on top of that, you have massive deposit flight. I've been talking about that for about 2 years now. Massive deposit flight. So you have that going on. There's a lot of problems in the banking system. You can't just narrow it down to one, but hey, unrealized losses. Okay. It says, according to Joseph Lignac, my apologies, Lignac, a banking attorney, so this is serious business, at Dorsey and Whitney, the first bank to have collapsed in 2024 will not be the last. But you heard it from Alpha Neem first. I mean, listen, I don't have a crystal ball. I don't know. Maybe they won't collapse, but I think that there's a high possibility that they will, multiples of them. You know, we've read 2 or 3 articles already this year from so-called experts that said 300 banks are at risk. They confirmed and reconfirmed the number, over 300. So, I mean, at any time they could go down, but we'll see. Who knows? I don't put a guarantee on anything. All right. It says, and there is substantial danger of additional failures in the range between the smaller community banks and the biggest ones. According to the experts, the danger is twofold. On the one hand, high interest rates have caused a significant depreciation of low yield treasury securities held by the banks, and the struggling real estate market is also having an impact on the sector, which, by the way, now, and I think I believe I have the article here in this video. It'll be one of the chapters. You'll see it if I have it. But now experts are saying that it's just as likely to see interest rate hikes this year because of inflation. And I said last year inflation was going to go back up. We based that on the information that we were provided from experts. But the experts are now saying it's just as likely to see interest rate hikes as it would be to see an interest rate cut this year. See how things change so quickly? It says, and we'll get to that article later. Hopefully I have it. If not, you can look it up. You'll see it. It was posted either yesterday or today. It says, and the struggling real estate market is also having an impact on the sector. The former danger is seemingly further corroborated by the FDIC, which already stated, here we go. So the FDIC is speaking now, which already stated that banks are sitting on substantial unrealized losses. The closing of Republic First has also delivered a major hit to regional banks, as it is likely only to drive more depositors to the relative safety of large banks. Wait a minute. I'm not going to let them off the hook that easy. Sure, maybe some people will take their cash, they'll take their value and go to the banks. But wait, it's been reported largely that a lot of people are leaving the banking system. Not all, but a lot of them are. They're going into what? Let's just put gold to the side, because we do know some are putting some value into gold and silver, but also money market funds. A lot of them are going into money market funds. Right. So Look that up. You look that up. That's good information to have as well, because they're giving pretty good yield. It says, though they are far from completely safe, given that 16 years ago, even JP Morgan needed a $25 billion, just say bailout. They say in government aid, it's a bailout. They're getting bailed out. JP Morgan, who talks so much trash, needed a handout. Just call it what it is. So you have that. There's your warning for the day from the expert lawyer. All right. All right. So now let's get to a little bit of this Bitcoin news here. And listen, there's a lot of factors with Bitcoin, not only the ETFs coming out and the usual happenings with ETFs now, especially crypto ETFs, where they come out and then there's not this pop that everyone wants to see. I don't know why they want to see that, because it typically takes some time for ETFs to kick in, as you saw with the US ETFs. But for some reason, if people feel that way, I'm seeing a lot of reports on that. Like, oh, man, the ETFs are disappointing. The Hong Kong ETFs, which was a Bitcoin ETF and the ETH ETF. So then that sentiment right there, could push things down short. Not a lot, in my humble opinion. You're saying, well, look at the price right now, Mick. Yeah, but look at what else is going on. The dollar was strong. I don't know what it's doing right now, because things change very quickly in these financial markets, but the dollar is strong. Then you have the people waiting on whatever the Fed is going to do. Right. So you have those two factors there. Then on top of that, we covered about a week ago, I told you that the U.S. Treasury yield was going up. Right. It was either possible to go up or it was going up. So that went up. Whenever that happens, then risk assets are going to lose some. We talked about this a lot last year. Remember, anytime you have U.S. Treasury yields go up, people are going to leave risk assets and they're going to go for whatever they believe is a safe investment to get that yield. So then you have that. So you have like 3 or 4 different factors pressing down on crypto right now, so there's that. And then that's apart from any other market manipulation that's possibly going on, because I don't put it past them that, listen, if they make a few phone calls and you have this new ETF, you have new businesses that can invest, new big money people that can invest. And then not only from Hong Kong and, but also remember, once again, there was also a lot of U.S. companies that sat on the side when Bitcoin exploded before a few times. And they said, hey, we want in now. We sat out before. Literal articles written on that. They didn't make that any secret. So I don't put it past them that somebody, they make some phone calls and talk to their people and they push that price down deliberately so that they can have a better entry point, because they know once that price starts going down, retail is going to sell. And then that makes for a more delicious entry point. You buy it lower. And then once they're ready, they'll let it pump up again. All it takes for that price to go up a little bit, a few positive articles here and there, and then boom, bull market back in full swing. So I look at this just as a natural pullback, healthy, natural, great pullback, and, open up a lot of opportunities. I'll definitely say that. So now it says here, legendary trader Peter Brandt says Bitcoin has a 25% chance of hitting $160,000. Seasoned trader Peter Brandt believes there's a 1 in 4 chance that Bitcoin will top out at $160,000 this cycle. Let's scroll down here. They go into the whole he has 700,000 followers spiel I don't care about whatsoever. It says, quote, note that I assign a 25% probability to my analysis. I give more credence to a report I issued in February. Here is a chart from that analysis. They go into a little chart there. And he says here, based on the trader's chart, he seems to suggest that it took Bitcoin 525 days from its November 2022 bottom at around $16,000 to breach $50,000. Using that number, Brandt says Bitcoin has 525 days from $50,000 to break out to reach its $160,000 peak. Oh, I see what he did there. That's interesting, actually. It says the $160,000 Bitcoin price target appears to be a conservative projection. Sure, amongst all the other projections, yes, it is 100%. In February, the veteran trader predicted that Bitcoin would rally to as high as $200,000 by September 2025, which definitely is possible. It's possible, not a guarantee. He says the prediction remains valid as long as Bitcoin stays above $50,000. At the time of writing, Bitcoin is worth $63,776. I know it's not that right now. I don't know what the price is right now, but I believe it's lower. probably significantly lower than that. I think I saw it hit 59,000. The north end of 59,000. Correct me if I'm wrong. I believe that's what it hit. My apologies, folks. During the middle of the day, I am so busy. I'm running around. I get to see things just very briefly, but I believe I saw $59,000 Bitcoin. All right. So anyway, let's move on here. We're going to skip the Hong Kong and Bitcoin ETF article there. We spoke about that a little bit already. So let's go here to more news. Here we go. So the truth is finally starting to come out, and I'm happy about it because I've been talking about this for a while. Although I will disagree that it's a recession. I believe it's a depression. It says this. This is from Yahoo. The U.S. economy is already in a recession and is following the same path as China by becoming reliant on debt, veteran forecaster says. I would reverse that and say China walked in the footsteps of the U.S. and that's why they ended up they're having the struggles that they've been having. It's just that, of course, the U.S. being the originator of what they do it a little bit better. So I would reverse that, but doesn't really matter. It says here. It's my apologies. At certain points in this video, I may be at a loss. Lost for words. It was a busy day today, folks. You working hard out there? You're doing good. I hope you are. The U.S. economy is already in a downturn, and it could be following in the footsteps of China as the government assumes a growing amount of debt to prop up growth. Danielle DiMartino Booth, a veteran forecaster, says. It says here, the chief strategist of QI Research has said for months that the U.S. economy is already in a recession, despite Wall Street's upbeat outlook for a soft landing. But a downturn is evident in the weakening job market, Booth said, pointing to recent downward revisions in a monthly job growth figures. The job market remains on solid footing. By historical standards, the economy added a more than expected 303,000 jobs in March, while the unemployment rate remained near a record low. I want to know what type of jobs those are. It matters. What type of jobs are they? How much do they pay? Because we all know, and it's a fact from other experts, affordability of living has been terrible. Wage growth has slowed to a crawl. How much are these jobs paying? Are these warehouse jobs? Are these the gig economy jobs that now they're trying to make, companies like Uber consider gig workers to be full-time workers? Workers like, what is this? I need to see a little bit more information on that, in my humble opinion. Just my humble opinion. It says, but new payrolls were revised slightly lower. Look at that. That's what I'm talking about. New payrolls were revised slightly lower. Listen, maybe I'm reading this wrong. You tell me. But we also read reports where they said that companies now. So here's what's happening. So for a while, a lot of workers were getting comfortable leaving their jobs they were unhappy with, and they could job hop, especially with remote work. A lot of companies were desperate and they just wanted to get people back to work. And then they also wanted to get people back into the office if they were willing. So they were paying them a little bit more. Then there was a falling out between the employers and the employees. And what happened is when an employee would jump from job to job, now what they're doing is paying less. And it also is happening with layoffs. This is what I'm hearing, folks. This is what I'm hearing. OK, if you're experiencing something different, to each his own. There's nothing I can say. I won't debate that with you. This is what I'm reading, that there's been mass layoffs continuously. So what's happening when they lay off the people, they hire new people for cheaper. This is what I'm reading. So that would make sense if payrolls were revised slightly lower. But anyway, so February falling to just $270,000. Also, let me add in there, my apologies, I'm forgetting an important piece. So also with paying less for newer workers, then there's also, I've been hearing they're making people do more work. Like they're combining jobs together where people are doing two or three people's jobs for the same pay, or they're new hires and they're doing two or three people's jobs. They're not aware of that until another employee tells them two or three people's jobs, but they're getting paid less than what the prior employees were paid to do one person's job. Did that make sense? So, I mean, in my opinion, just from reading that information, if that information is accurate, there's a lot of manipulation going on here with these numbers. It Says, meanwhile, layoffs and unemployment have inched higher in recent months, with total discharges rising to 1.7 million in February, according to the Bureau of Labor Statistics. By the way, I always want to say this every once in a while. Look up and research everything that I say, question everything that I say. I want you to find the articles. I want you to read it with your own eyes, screenshot it, save it, so you know the accurate information. All right. So I'm always open, question everything I say. And sometimes I can make mistakes as well. But you know that, like, I'm a person, I don't try to come on here and be an all-knowing individual. No, I just share what I've researched and what I remember and what I believe. And then I leave it up to you. Make up your own mind. It says, quote, these revisions, they keep pushing us back further and further from where we thought we were, Booth said in a recent interview. Quote, it seems like every time companies report their earnings, they're doing it with a kicker that says, hey, we're going to lay off. See, I told you. We're going to lay off 2,000 people or 1,500 people or whatever it is, unquote. Layoffs, we were just talking about this. Layoffs could end up rising from 150,000 to 370,000 by the end of the year, Booth said in a previous interview. Other economists also foresee a weaker labor market, which raises the risk of a recession. The economy could enter a hard landing by the end of the year and cause the unemployment rate to surge 5%. David Rosenberg, a top economist, recently said the economy is already in a rocky position. Let me pause there. You know what? I would love for these economists to speak more. I know they're busy, but we need to hear more from them because their words carry weight. The economy could enter a hard landing by the end of the year. The economy is already in a rocky position. Haven't I been saying that? Now you juxtapose this. You have a top economist saying the economy is already in a rocky position. Meanwhile, the government continues to say, I heard it with my own ears, that everything is fine. Then you had someone like Jamie Dimon talking about the consumers have more money and everybody's doing great. Not only that, he said, and yeah, I'm going to keep bringing it up because that's just wild. He said that they still have stimulus money to be removed, even though the M2 money supply shows complete opposite. But once again, this shows you how delusional or manipulative these, big money people and governmental entities are. When a top economist has to say the economy is already in a rocky position. This is especially considering the ballooning U.S. debt levels, Booth added. Government debt taking, I think they had a typo here, makes the U.S. economy look precariously similar to China's, she said, where state-owned enterprises once accounted for as much as 60% of GDP, according to a 2019 estimate from FactSet. This was a good article by Yahoo Finance. I'll say this right here. I don't read a whole lot of Yahoo, but finance.yahoo, whenever they put out an article, they're cooking. They do a good job over there. I'm just giving respect where respect is due. So now let's move on here. We have a few more articles, but I want to just do one more. We have a digital pound article. We have, we have the interest rate hike article. I want to do that one because I already spoke about it a little bit, and I want people to know that it's real and hear what it says. All right. So let's do that one. If it'll pop up here. So this article is from CNET and is titled, let me scroll up. It's titled, Fed Meets Today. Watch out for interest rate hikes instead of cuts this year. This is coming from another economist. Wow, I don't know what's going on, but these economists are coming out today or within the last day or two, and they're roaring. They're making sure their voices are heard. So this is coming from another economist. It says, if you figure the Federal Reserve would lower interest rates soon, you may want to prepare for the opposite to happen. Experts expect the Fed to hold rates steady at its meeting that starts today. And one economist says rate hikes are more likely than cuts this year, as the Fed tries to squash stubbornly high inflation. And last year we went over it. We went over stagflation. And now it has confirmed what we were saying. It says the Fed paused the federal funds rate. And why did we say that stagflation was going to settle in? The reasoning from the articles that we covered on the channel was that every time the Fed takes their foot off the gas, remember I use that exact verbiage. Every time the Fed takes their foot off the gas, inflation goes back up. And then they did what? They took their foot off the gas, even just holding steady. It doesn't make a difference. Like I said, I thought that they should rip the Band-Aid off quickly and get it over with. But even holding rates steady, they took their foot off the gas. Then what did they do? They did a cut at some point. Was it one cut or something like that? Am I remembering incorrectly? And inflation went back up. And as soon as I saw that, and these different jumps in inflation at different times, I said, yep, stagflation. And now you have economists confirming stagflation. It says here, experts expect the Fed to hold rates steady at its meeting tomorrow. The Fed paused the federal funds rate at a target range of 5.25% to 5.5% in August last year after raising interest rates 11 times between March 2022 and July 2023. Inflation reacted quickly, dropping from its high of 9.1% in June 2022 to 3% 1 year later. That's actually the numbers, the way they calculate everything is very, very interesting when they negate certain information. Negate certain data like energy and food. I believe it's energy and food that's negated from the numbers, right? Which is why you still see these elevated prices, but whatever. Some people are going to say gouge, it's gougeflation and such like that. Tomato, so be it. But inflation has been hovering around 3% since then, above the Fed's target rate of 2%. Quote, I don't see any way the Fed can cut rates this year as hiring remains strong and inflation is still above their 2% target. There's a better chance they hike rates than cut them this year. And if they hike rates, guess what's going to happen? A lot more people are going to lose their jobs. That's just a fact. It says an unexpected jump, and then obviously higher interest rates affect everything else, many other things very negatively. Quote, I don't see any way the Fed can cut rates this year. Okay, they reiterate what they said at the top. Quote, there's a better chance they hike rates than cut them this year. In the lead up to the Fed's two-day meeting that starts today, comments from the New York Fed President John Williams, Atlanta Fed President Raphael Bostic, and Fed Chair Jerome Powell all indicate that no one should be getting their hopes up that the Fed will cut rates anytime soon. Quote, given the strength of the labor market and the progress on inflation so far, it's appropriate to allow restrictive policy further time to work. Higher for longer, anybody? Unquote, Powell said earlier in April during a panel discussion in Washington, D.C. Interest rates are the highest they've been in over 20 years. All right. So now let's see if there's any other articles that are really, really pressing. We have office default loan article. Then we have the dollar gains ground as markets turn cautious ahead of the Fed. I sort of already discussed that because I did see the dollar got a little bit strong. Another one about the Fed rate decision. I don't want to read too many of those. They may all iterate a similar sentiment. Let's close out here with this office loans because this involves the banks. And this is one of the reasons the banks will probably go down, commercial real estate. But this article says this: office loan defaults near historic levels. They're in trouble. The banking system is in big, big trouble. Bear with me one moment. It says defaults are reaching historic levels in the office market as a growing number of owners capitulate to persistently high interest rates and weak demand. Emphasis on weak demand. People don't want to go back to those offices. Come on now. It says this: more than $38 billion of U.S. office buildings are threatened by defaults. Get ready, folks. It says defaults, foreclosures, and other forms of distress, according to data firm MSCI. All right. So now that you have that information, what are you going to do with it? I know what I'm going to do with this. So until next time, everybody, let's get to the money.